Bill Cohan is with us here in the newsroom. He is a Bloomberg contributing editor, also an author. House of Cards, just one of the books that he has penned. Former investment banker on Wall Street. Bill, always glad to have you in with us.
Nice to be here, Deirdre.
So we were talking about Paul Miller from FBR, the analyst comments, you know, expecting a strong quarter, not steroid strong, but this looks pretty pharmaceutical.
Brian Moynihan's been, you know, lifting weights. It's looking good, but I think Paul makes a very, very important point. And let's face it, without the Fed's support, in other words, what I mean by that is being for these big banks and let's face it, Goldman Sachs and Morgan Stanley too, who are now big banks and holding companies. Without them being able to borrow from the Fed at close to zero and then turning around and lending it out, that arbitrage is making for a lot of money on the bottom line. That, as well as Merrill Lynch, capital markets activity has, you know, rarely been higher than it was in the first quarter, hitting on all cylinders. Not on the M&A side, but certainly in the high-yield debt reissuance side, the leveraged loan side, things are really, you know, cooking along very nicely.
So the two takeaways here: fixed income just as strong with Bank of America as what we saw with J.P. Morgan Chase.
Yes.
You make the point. I don't want to say it's easy to do because I'm not the CEO of a bank, but it looks like pretty favorable conditions for this part of the business. And then the Merrill Lynch acquisition, which everybody, or not everybody, but some have been crowing about, is basically the strong part.
Well, Merrill Lynch is helping them, again, as Paul Miller said, because the capital markets, this whole need to re-equitize and refinance is driving business across the street. That, combined with the Fed's gift to Wall Street, is really driving earnings at the moment.
We have to say, maybe we're surprised to the extent of the beat, but we were expecting investment banking and sales, you know, the retail business, to be particularly strong. And then on the flip side, these credit concerns, and Eric highlighted it, especially in the housing market. I mean, they still have Countrywide, that's sort of the rock around their neck.
They still have commercial real estate loans that are out there that you know, still haven't come home to roost fully yet.
Bank of America, we want to revisit this. A huge beat, both on the top and the bottom line. Bill Cohan's still with us here in the newsroom. What does this mean? All right, so this is J.P. Morgan Chase, now Bank of America. It looks like it's just setting up Goldman for some kind of home run hit as well.
Got to have blowout earnings for Goldman next week because they are, you know, the premier fixed income sales and trading FIC group, you know, fixed income commodities, currencies. I would expect them to, you know, plus they get the gift from the Fed, and the combination of it all is going to be, and no, you know, no facing of the consumer where the problems were for both J.P. Morgan and Bank of America. I would say Goldman is on the move.
It's just going to rock it.
That would be my guess, but we'll have to see.
Coming back to Bank of America, how much credit can Brian Moynihan take? I mean, it's early days. He's only been in since January. We've been saying the Fed is creating such favorable conditions for all these banks. So not that we want to just make him into a piñata, but is this a layup for him, or does he get any credit for this?
Well, look, I think he's stabilized. I mean, there was a lot of turmoil in the last 2 quarters of last year. The whole management succession issue. People seem to have a lot of respect and admiration for him. And let's thank
because Ken Lewis honestly was hated by at least a lot of Merrill people that I know.
It brought on a lot of uncertainty at that firm. Brian has at least stabilized it, and he's got the gift from the Fed, so he's hitting on all cylinders at the moment. A lot of work to do, though. A lot of integration work. Got to fix the consumer part of the portfolio. So, you know, he's got his work cut out for him.